So last month, inflation was 2.7%, and everybody was congratulating Canadians, including our Finance Minister Chrystia Freeland, and every other Liberal MP was congratulating Canadians that we are the first one in G7 countries to cut rates. Okay, so that was the level of insanity we have seen. And this morning, the inflation has gone up to 2.9%. So it might be very confusing for an average Canadian, but you have been watching my channel. You know that inflation doesn't go in a straight line. There is no linearity in any shape or form here. Okay, so inflation goes up and down, up and down, up and down. So you could expect that. And in my previous videos, I talked about that the carbon tax that was implemented on top of the fuel prices, this will be seen in the data further down the road. And now we're seeing that the transportation cost has gone up. Okay. So what's going to happen? Basically, the market is pricing in 40% chance of rate cuts in the next meeting. Used to be 60%. Okay. So the probability of the next rate cut is going down, especially when Federal Reserve hasn't moved at all. Okay. And remember, there were 6 rate cuts being priced in the market at the beginning of this year. So far, we have seen 0 rate cut from US Federal Reserve. And perhaps we will not see any rate cut until the election. Maybe they will cut after election. That could be a political move from the administration. So what's going to happen? So basically, I think this will be a difficult job for Bank of Canada's governor to still go for another rate cut while the inflation is going up and Federal Reserve hasn't moved. So the differential of the rates between US and Canada is going to go further wide, which is going to put a lot of pressure on Canadian dollars. So we'll see. I think they will not, cut rates this time. They will pause it, but I could be wrong. You never know. But this is my analysis, just as a normal person, that perhaps they will not cut the rates. They will stay at the same level. Now, we know that the recession is here. Like, there's no doubt about that. What the mainstream media is trying to sell you is this soft landing scenario. It never happened in the history. If you look at the 100 years of data, we haven't seen any soft landing scenario at all. If you understand the overall monetary cycle and the rate cycle, it's a typical cycle that the central bank induced the acceleration by lowering the rates, start buying the bonds. This will create some activity in the market, and then this will also create inflation. And when the inflation goes out of control, then they try to tighten the monetary policy, increase the rates so that it can induce a technical recession. And when the recession goes out of control, then they try to stimulate the economy by lowering the rates again. So rate cutting cycle is always the after the fact of a recession, of an economic crisis. Okay, so this whole soft landing scenario, it's just a theoretical concept, never happened in the history before. I don't know if they can do it this time. Like, why this time is different, I don't know. Anyway, the yield curve is inverted and has been inverted for quite some time. So the economy is unsound. Economy is struggling. We are seeing unemployment is going up. We are seeing the retail sales is going down. We are seeing the inflation sticking around, which means the consumers are pretty much running tight on cash. And the real estate market is kind of chugging along. And the reason why the real estate market is chugging along is the banks have extended the amortization. So when you look at Canadian mortgage, right, majority of them are still on fixed rate mortgages, and they haven't seen the renewal yet. They are now going to renew their mortgages in the next 2 years at a much higher rate. Okay, so that storm hasn't hit yet. For all the variable rate mortgage holders, the banks have been extending mortgages up to like 90 years. So imagine if the banks, did not extend the amortization, what would have happened to those mortgage holders? Honestly, tell me. So the fact that they have extended amortization to 90 years, that is also a proof that the market has already crashed. The banks provided this artificial layer to kind of support it. Okay, those variable rate mortgage holders have already defaulted on their debt obligations by extending the amortization to 90 years. Okay, so the fact that people will tell you, hey, housing market is fine, the prices are still going up, there is no crash, what are you talking about? Well, my friend, The market has already crashed. If you look at from the peak, we are down 20% in nominal terms. Nominal terms. If you adjust with inflation, perhaps we are down 30%. Who knows? And then all these shenanigans by the financial industry, extending the mortgages, extending the amortization, it's basically kicking the can down the road. Okay, eventually, the chicken has to come to the roost. And when we see these fixed rate mortgages coming up for renewal in the next 2 years, and if the rates stay at this level, this is when we see the real crash is going to happen. Anyway, you guys let me know what you think about that. How are you protecting your assets, your financial freedom? Let me know in the comment section. And if you need any financial advice, any financial consultancy, let me know. I can connect you with my financial advisor, one of the best in the industry, and they can give you an honest advice with regards to retirement planning, kids education planning, as well as the estate planning if you need. Let me know if you need it, and I'll be more than happy to help you. I'll see you in my next video. Bye. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.